Hey everyone, John Henry here, slingshotfutures.com. Today we're going to be taking a look at something that a lot of people just keep requesting. They really like these videos. And we're going to be doing a candle-by-candle analysis of the S&P 500. Now, in terms of the overall analysis, of course, we do not want to cheat, so we'll go in, we'll set the properties to 750 on the right side margin, and we'll move this over so I can't see anymore. And really what we're looking to do is kind of analyze what the market's doing, how it's moving, and just get a general feel for how we break down the markets from more of a kind of a technologically psychological standpoint. Does that make sense? So coming right out of the gates, obviously the S&P is coming under some pressure. Right, we have a relatively range-bound start to the day. There's not much going on in the pre-market, and we're just kind of fiddling around without much happening. Yesterday had a huge amount of movement on the S&P and all the indexes, and it rebounded quite a bit. So one of the big clues that we have is just what's going on. You know, right now we're making lower highs, but we're also making higher lows, and that means that we're in a wedge, right? Nothing is really happening yet. We're more in a range, maybe with a slight downward bias, given that yesterday's move was fairly large and fairly bearish. So when we come into the open, what do we have? Well, into the open, what happens? Right before the open, we break out of the wedge. So we broke down out of the wedge, and now we're showing really strong signs of bearishness. So just like that, right before the open hits, all of a sudden the sentiment completely shifts. We're now dealing with a potentially bearish open. We're gapping down. All of the index markets are pushing down pretty heavily at this point. And we have a breakdown out of structure pushing lower. So really what we would like to see here is a form of a retest, right? Come back to the top of the wedge, maybe retest it, something like that, give us some resistance up here to sell off of, and drive the market back down, because we have every reason to believe that we're probably going to be a little bit more bearish now. We come out right into the gates with a huge bear bar. Okay, so we're probably not going to get that spike higher. This is that down move that a lot of traders basically just sold at the open. Made a little bit of a pop higher here, you know, maybe a couple ticks, and then rolled over and went hammering down. And this is the S&P on a 5-minute chart, but we're still talking 8.5 points, which is a lot. That's a big 5-minute bar. So we have an 8.5 point drop to the downside right out of the gates after we've already had some clues of bearishness. It's going to be a little bit of a concern, because now we're dealing with a situation of, okay, well, is this going to keep going? You know, is this move already done and we're going to bounce back? Need a little bit more of a clue in terms of what to expect. So we go on after the first 5-minute bar. We give it a little bit of time because we need to get that extra information. So we get that extra information in the next candle, which is continuation. We're seeing more bearishness to the downside, showing that sellers are still pressuring it, right? It doesn't matter that it dropped 10 points at the open, it just dropped another 5 or 6. So the sellers are obviously interested. The important part that we're really looking at now is, okay, well, if the sellers are interested, can they follow through with the third bear bar and get that 3 bear bar start to the day? Or are we going to run into a situation where we have a little bit of a 2-bar drop into a corrective phase back up? So now we're waiting, right? There will be sellers that sell the close of the second bar of the day, but there are going to be a lot of sellers who are also already short or waiting for the opportunity. Here we have the third bear bar, and it is an inside bear bar. Inside bear bars are always really tough. But in this context, can't you feel the weight, right? I mean, it tried going up, it tried putting in, and you can see this wick at one point, this was a full bull body, right? At one point, this candle looked like this, a big bull bar. And then it rolls all the way back down and closes on its low. That is a very bearish signal that a lot of sellers are still in the market, and every time this market tries to even come up, even think about coming up, it gets slapped all the way back down and closes bearish. There will be sellers that sell underneath this, looking for continuation down to a new low and maybe down to the next level of structure. We have a 4-hour channel bottom at 28.66. There's a good chance that we find some push down to that point. Right there you go. Okay, so we have sellers that trigger in, they push the market down, and they run into support. What's the big caveat here, though? We have sellers who now have 3 going on 4 consecutive bear bars, every single one of them closing on their low or just a few ticks off of their lows. That's a huge amount of bearishness, and we're now dealing with a basically sell everything market. There are going to be sellers who sell the close of this bear bar here, but there's going to be even more sellers who sell every single close after this, with the assumption that at some point there will be a bounce and then a return back to the lows, and that's where they're going to be looking to exit. Now again, like we talked about in the video yesterday, Even though this is something that a lot of larger traders are doing, they're building in, and even though you may not be trading like this, we still need to understand what they're doing to get an idea of what the market is likely to do. So now that we know what the big sellers are looking to do, that gives us an idea of what to expect. Basically, every bear bar, probably going to find some follow through. And that's because sellers are selling every bear bar on the way down. So we have a sell right here. We have a sell right here on the close of this bar. We have another sell on the close of this bar. And really at this point, what we're waiting for is that corrective phase, because that corrective phase, we know that a lot of traders are going to be looking to add into their position now that we have a strong down move, get it to pull back, and assume that it's going to come back down to the lows. And this is the bounce that everybody's waiting for now. We have another big bear bar, selling more, right? Big bear bar, sell, 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 all the way down. Another bear bar, sell the close of that one. And now we finally have a bounce back. So we're getting a bounce, right? This is where we can start saying, okay, right? We have an average down position that we built in, right? We've got 1, 2, 3, 4, 5 contracts on the way down. The average price is probably about halfway inside of here. And really what we're looking for is looking for the market to roll back over and retest at least the low closes to the lows, right? This band is going to be the area of interest. Looking for the next bear bar to sell into. This bear bar has a higher entry point than the one previous, so that is another possible sell, right? It triggers in short, taps the low, closes, bounces back up. We're in a little bit of consolidation. This consolidation, is this going to scare the sellers? No. Look at this move down, right? This move down is very likely, with a very high probability, that any bounce that happens, you're going to be able to find another way down to retest the lows. We have a push back up, another bull bar. Nothing to do here. We're just waiting. Another bear bar. Here we go, right? There's another entry point right at the low of that candle. I'm going to put it just underneath it because they're stacked up on top of one another, but it's at that same price. So as long as we get entries that are above this point or better, right, in the sense of higher, then we'll keep averaging in, right? We're looking for that move back to the downside. In this case, the market rolls back over. I'm not going to be adding any more on the bear bar because, well, the anticipation is that this is going down to the lows. I've already got a position built in. I'm looking to exit maybe 80% of everything at the low closes and hold on to the rest to see if we can get another leg lower. The obvious objective in this case is going to be from the start of this drive down for an ABCD measured move, right? And that would be way down here at 28.32.5. Now, are we going to get down to 28.32.5 realistically? Maybe, but probably not, right? It's already dropped a huge amount of ticks at this point. The S&P at this point is down like 100 ticks. What's the chance that it drops another 100, 200 ticks? Not going to be the easiest move in the world. We'll just leave it at that. But that is a downside objective. Another downside objective, one that I'm personally a little bit of a bigger fan of, is utilizing a 50% offset, right? So 50% offset saying, okay, I know that the chance of likelihood that we get down way down here to a measured move is going to be a little bit tough, but we have a target just ahead of that at 28.36 and a quarter, 28.36 even, depending on how you want to round it, to the downside that we're also looking for. You could also, and this is one that a lot of people look for, is a negative 23.6. So you do have you've got a bunch of different options you can work with in terms of downside objectives, but mainly I'm looking to take a good 80% of my contracts off at the low closes because that's my objective, to mitigate risk, and risk in this case is also the amount of risk that I have exposed on my account because I've been building in contracts. So now that we know that sellers are building in, what are we waiting for? Well, we're waiting for those low closes to test, and the assumption is that we're going to have a good bounce there, or at least a small pause, because everybody's taking profit there. We have a micro double bottom between this and these two candles here. Micro double bottom shows that there is some early support coming in. There may be sellers underneath it looking for a breakdown move, but we're running into support. And that's not a surprise. All the sellers that have been selling on the way down are taking profit on this move lower. So we're getting some support, and we can see that with the micro double bottom that's forming inside of there. But we still have breakaway volume. We still have candle gapping to the downside. We have a monstrous swing gap to the downside. Everything is still showing that the market wants to fall, right? So a downside objective, earliest one, would be just down to a quick new low. Right here would be the support level, right there. So that's kind of what we're keeping an eye on at the moment. See if they can break down again. Here they break down, and notice what happened here. They came one tick away from those low closes. And if this were a strong bull bar back up, that would have a lot of sellers move their stop above that, because now they realize, oh crap, this might be the bottom. We might not be making another leg down. I need to start protecting. But this candle closed super, super weak, barely any body to the candle at all. That's not going to shake the confidence of anybody. And now we actually have a micro double top. If you're aggressive, you could argue a sell above this. Right? Placing a sell above this with the assumption that the buyers are basically nowhere to be found. We have every reason to believe that the sellers will continue down for a second leg, so selling a trap high makes a lot of sense. Now, I'm not going to include that in this, but that would be an area that I would definitely be interested in. We form a micro triple top now, and we complete the objective, right? So 80% is off the table. This is where, in this case, we built in, let's see, 1, 2, 3, 4, 5, 6 contracts. So 80%, we'll just say 4 to make math easy. We'll take 4 contracts of the 6 off here. We're looking for another single contract off here at the swing gap objective down, and then we're looking to hang on to the last one to see how far it'll go, right? We bounce back. Oh man, perfect. Well, even though it did fill the 80%, it still gave you a trap on the highs and started fading back down again. So again, another good sign. Where are the buyers? They trigger above a triple top, but they completely fell apart and rolled right back over again, closing out this garbage bull candle. Again, that's not going to convince anybody of, oh man, I need to be a buyer here. Nobody's going to look at that candle thinking that. We roll on to the next candle, we now have a double bottom, right? So we have a double bottom on the lows, and that's a little bit of a concern because now we're running into a situation where a lot of sellers probably exited a good chunk of their contracts. And notice another caveat. This candle closed above those low closes. That's where we already took 80% off. That shows us right away there are a lot of people that are taking profit every time it drives down. So we have to be a little bit safe, right? We've got to play it on the safer side because there are definitely some concerns. So one way to do that, now that you've had the trap high, you have a really weak bear bar, it's closed back above the highs, put a stop above the high, right? Let the rest run. If it wants to stop you out, fine, whatever. It stops you out, no big deal. But if it wants to continue, you're giving it that chance to roll over. A lot of people will just immediately exit on that, but I think you're exiting a little too early. You're giving up a potentially very nice win. The markets are under huge amounts of pressure. Why would I believe it if it's going to pop higher, right? So we'll give it a little bit of time. Sure, we have some weakness here, but as long as it doesn't trigger up, it's not going to shake the confidence of anybody. There we go. Now we have a breakdown to a new low. Notice it never went above that bear bar. Sellers held it down, and we're breaking down. This is the first time that the market's been able to close underneath these lows. We need to see them stick, right? We don't really want to see them close back up again because then we'd be dealing with a twin reversal. And that would be a close under and an immediate close right back up. That's a big red flag. We do not want to see that. If we see that, the stop immediately goes above that bull bar. Right now, we have a shot at continuation. Again, looking to take the one of 2 contracts off at this area here. That is the swing gap target. And that's kind of what we're looking for next. There's your target fill. So now you're only holding 1 contract, right? You're only holding a single, and you're trailing along the way to see if there's a reason to exit. We have all the other profit targets taken out. All of the other ones are done. So now it's simply just a matter of holding, right? Letting it go and seeing how far it wants to go for this final one. Primary objective is the measured move, maybe a little bit ahead of it, right? Maybe a little bit ahead of it. We go a little bit further forward. We're starting to see a little bit of weakness. These horizontal lines that you see here are from our 4-hour chart. Those are levels of support that we watch. So 28.42 and 3/4 is another level of support, but to be fair, we still have open candle gapping, we still have open swing gapping, there's still a lot of things pointing to the downside. More continuation lower, finding support at 42 and 3/4, and not really doing much, right? It closed on top of it, it's not closing underneath it, it's not really breaking down. Maybe we're finding a little bit of potential profit taking again. We've already averaged out of almost everything, so now we're just kind of hanging on. But there will be some traders who see this. We're seeing a little bit of weakness into another bear continuation down. Signs of weakness will cause them to move their stop lower and reduce the risk. There we break out, right? We have a nice strong breakout to the downside. Everything is looking pretty good, right? Everything's looking pretty good. Now again, I'm looking at this thinking, okay, well the measured move is at 32.5. If I want to front run it, I'll probably go to 33.5, right? Front run it by a point or so. Given the volatility today, it should be doable if it wants to get down. But we are seeing some weakness at it, right? There's a bunch of wick forming on the bottom. All of the candle gapping is now closing. We're not having any more downside objectives. The last downside objective that we had was the candle gap between there and there, which points to 28.36 1/4. That's kind of the last one that we have applicable to work with. We still have downside pressure, but it looks like it's starting to dry up a little bit. Then we have a really strong bounce back. Now, this is obviously still a very strong downtrend, but when you have a complete reversal candle, right? This candle closed above 2 previous bear bars. It's a little bit of a sign of concern. This might be a washout, and it goes back down again. But a lot of traders are going to put their stop above that because they don't want to deal with it bouncing all the way back up, right? So we do know that there will be stops above this bull bar, and we might have some issues there if it, if it has a little bit of trouble. We have a small inside bear. Oh, and actually, this is the current candle that's forming right now. So we have an inside bear bar that's forming right now. We still have 4 minutes left. We're just kind of waiting to see what this candle does. So in reality, this day by itself offered up a huge amount of different trading opportunities just by understanding kind of the back end of what's going on, right? What are the big traders doing? You may not be able to do what the big traders are doing, but understanding what they're doing, they're the ones that move the markets, and they're the ones that we need to keep an eye on. And by following just that, knowing that with this amount of aggression down, they're going to be selling heavily on the way down, and selling into the correction with the assumption that it's going to go back to the lows, offered up a ton of different opportunities for trading. That's why we pay attention to that, and that's why we break these candles down the way we do, so we can understand what's going on. So hopefully you found it useful, hopefully you found it interesting, or at least entertaining. I know a lot of people love these types of videos where we go candle to candle and break everything down. If you have any questions about it, feel free to send me an email, jbrink@slingshotfutures.com. Of course, underneath the video, give us a like, throw a like on the video, so, it's a lot of people tend to like these anyway. But along with throwing a like on the video, make sure to click on subscribe and the notification bell icon to the right of that so you're notified every time one of these videos comes out so you don't miss anything important. Aside from that, I hope you had a phenomenal trading day today. I hope you have a great trading day tomorrow, and we'll see you all in the next video. Thanks.